What's up, Fired Up Wealth community? Eric here, Mr. Fired Up Wealth. Happy 2023. I hope you had a great New Year's. I'm excited for this year. This is going to be the busiest year on Fired Up Wealth ever, not only on the YouTube community, but also the private community. And today I've got an exciting video to share with you. I'm going to share my top 10 holdings. Now, this is titled 10 Best Stocks to Buy. Of course, I think these are the 10 best stocks because they're my top 10 holdings. Now, with that said, if I were to start a portfolio today, it might look different if I'm a new investor. I've been investing for almost 25 years. A lot of the holdings here I've had for many, many years. In fact, the top holding I've had for over a decade, and I've just been holding it long and letting the dividend drip. So if you're starting a portfolio today, it depends on your risk tolerance, your age, your suitability, your goals, timeline, all that kind of stuff. But I'm excited today, guys. I'm going to bring you my top 10 stocks by concentration. It's January 2nd, 2023. Let's get it kicked off. All right, what is the top holding in my portfolio by concentration? Microsoft is number one, guys. Now, Microsoft I've had for over 10 years, and I've continued to let the dividend drip. Concentration right now is 5.27%. Most of that's actually profits. PE ratio is a 25.84. If you buy the stock today, the dividend is 1.13%. Now, if I use my original cost basis and use that for yield on cost, my yield on cost is almost 9%. Now, of course, if you add the dividends that have been dripped, it's closer to 6%. But if I basically bought this stock 10 years ago, I let it compound, let it drip, let the dividends reinvest, and 8.9% if I just use my initial cost basis, because those dividends are free. So that's a pretty impressive yield on cost. There's not much reason to sell the stock unless I think the story changes. And I think this company still has a lot of runway over the next 5 and 10 years. Everything in this portfolio, my goal is to hold it for at least 5 years unless that story changes. So you know what Microsoft does? They're a conglomerate, largest vendor of computer software in the world. Also a leading provider of cloud computing services. It's a big reason why I continue to hold it. Azure, I'm big into cloud and SaaS, and you're gonna see that as you go through my portfolio, especially if you see my entire portfolio, which will be available later in the video, so stay tuned for that. And Microsoft, of course, video games, computer and gaming hardware, search, online services. They've got a lot going for them, AI, lots of different things. These mega cap tech stocks, they have their hands in so many pots, and they're very diversified. It's like buying a technology conglomerate. Number two, any guesses? Now, this is one of the few stocks that are down in the top concentrations of my portfolio, and it's Snowflake because it was a new IPO. My cost basis isn't bad, but it is red. Most of these stocks are very, very green. Snowflake concentration, 4.87%. I'm very bullish on this, but I will tell you this right now. I worked in software as a service for over 10 years, and I'm very bullish. I understand the sector. I understand the business. This is a high risk stock. It's still very, very expensive, even at $130, $140 a share. So you have to be very careful with this. I think most people would own Snowflake as spec. I have it as my second largest holding, and I'd be willing to add even more if it continues to go lower. The EV NTM revenue, this is a metric you look at when you look at cloud and SaaS, software as a service, recurring revenue type companies. It's 16.6x. Now that's come down a lot from the highs when the stock was over $300. I don't remember the exact high, but it was much, much higher. Like all these names, 16.6x is still really expensive. If you're a value investor, this stock does not make any sense, so just ignore this one. But rule of 40, 87%. So rule of 40 is basically going to look at the growth of the company. It's a very strong metric at 87%. They do have free cash flow, so 21%. That's very good in this type of environment. If you've got negative free cash flow, the stock's not going to hold up as well. The company's not going to do as well in a recessionary type environment. Their net dollar retention, so that's essentially holding on to their customers and continuing to add more modules and build out more business with those customers. 165%, which is one of the highest you'll see in the industry. Now, I will note that Snowflake is not software as a service. This is more consumption-based, and it does have risk, especially going into a recessionary type environment, so definitely keep that in mind. Snowflake enables data storage, processing, and analytics solutions that are faster, easier to use, and far more flexible than traditional offerings. Think big data. Number three, guys, Apple. I'm recording this video on an Apple Mac. I'm an Apple guy. You either love it or hate it, probably. It's got its own ecosystem, its own environment. It's got fanboys. It's got a cult fan base, similar to like a stock like Tesla. Apple, my concentration is 4.72%. This is another one I've owned for several years, and I've actually trimmed this one several times. Most of my shares here are really going to be what we call house shares. It's basically just profit, just letting it ride. 21.25 PE ratio. Dividend yield, if you buy it today, is 0.71%. Now, my yield on cost using that original cost basis is 3.1%, which is very attractive. So, of course, Apple, you think iPhones, computers, personal computers, tablets, wearables, Apple Watch, accessories, and a range of services. Future prospects, you think healthcare, especially with the Apple Watch, fitness. I also think they're going to do more in streaming services. A lot of these businesses are doing streaming services more of a loss leader. We'll see how that plays out with time. And I also think EVs could at one point be big for Apple. Apple's constantly trying to reimagine itself. And I will admit that oftentimes they copy other people, but there's no denying that this is a strong company, strong balance sheet, strong financials, and it continues to do well. I'm going to continue to hold it long in my portfolio. Number 4, can you guess by the colors on the screen? Now, I primarily own Amazon for AWS, which is Amazon Web Services, the cloud services. Of course, the retail business doesn't do nearly as well. They've really got 2 cash cows right now. It's going to be Amazon Web Services, which is really the growth engine that's allowed them to grow their business and fuel their business over the years. But most recently here, their advertising business has become a cash cow and a behemoth, and I think that will continue to grow. I've owned this for many years as well. Concentration, 4.19%. Right now, the PE ratio is 77.52, so 77.5. Market cap was a $1 trillion company. Now it's under that at $856.94 billion. They started as an online bookseller back in the 90s, and they've morphed into an internet-based enterprise. It's another conglomerate. They've got their hands in everything. Exciting stuff in the future, perhaps robo-taxis, drone deliveries, all kinds of things like that. But most people think of them as a retail or e-commerce. I own them primarily for cloud computing or AWS. They also have, of course, Amazon Prime for digital streaming, Thursday Night Football, and they're big into artificial intelligence. You could argue that all these mega cap tech stocks really are going to have a future in artificial intelligence. And I think there's a lot of opportunity. There's also a lot of risk and disruption in AI, and it'll be interesting to see how that unfolds over the next several years. Okay, so I've covered my top 4 by concentration so far. Now, before I go on, I want you to please subscribe and click that bell to get notifications. We are going to do a lot more videos this year in 2023. If you're subscribed and you click that bell to get notifications, as soon as I drop a new video, you're going to get an email, you're going to get an alert, and you can go check it out. Definitely subscribe to the channel. Let's get this channel over 40,000 subscribers in 2023. That's my goal. Number 5, can you guess by the color on the screen? It's going to be Nvidia. And this one has been a really good performer for me. I've owned it for several years. Actually, I bought it in 2018 when it was in the 30s, $35, something like that. So this is mostly profit. I've actually trimmed this one as well. So it's mostly house shares. It's the only individual stock that I actually own in my retirement accounts. My retirement accounts are generally going to be ETFs. Concentration right now in this portfolio, this is my primary taxable, 4.14%. PE ratio is 62.16. That's still pretty expensive, right? Especially when the growth is slowing down here, recessionary environment. If you buy the stock today, dividend yield 0.11%, so next to nothing. My yield on costs is about 4 times that at 0.41%. Of course, when you think of Nvidia, you think of gaming, AI, data centers is really big right now for cloud, and there's a lot of growth in that segment. You think in the future more and more into electric vehicles. They have a segment for that of their business. It's very small. I think they can grow that. Digital twins, there's a lot of opportunity for Nvidia. This is a fabless semiconductor company. They have some of the best designs and engineers on the planet, and it's going to continue to do well, especially when you think of artificial intelligence and really every secular growth trend you can think of, whether it's going to be 5G, Internet of Things, autonomous, AI. I mean, all of it. Nvidia's got you covered. I think it's a must-own stock in any portfolio, and it's my number 5 holding by concentration. All right, we did green team. Now let's do red team. We got Christmas colors here. It's kind of too late for Christmas, right? But red team would be what? AMD. So AMD is going to be a competitor of Nvidia. In fact, there's some distant relationship between the 2 CEOs. When you think of Lisa Su and Jensen Huang, which is pretty interesting stuff, actually. 2 of the largest semiconductor companies in the world, and you've got the CEOs that are related distantly there. So that's pretty cool. Concentration on AMD is 3.23%. PE ratio is just under 39. Market cap is $104 billion. And this has very strong balance sheet, very strong, growth the last couple of years. You're probably going to see a decline. You could see more pressure on a lot of these stocks on this video, so there could be opportunities to add to your portfolio in 2023. When you think of AMD, very similar to Nvidia, they acquired a company called Xilinx, which really helped them in the data center business. You think of cloud data centers. So all of these cloud companies and everything going into the cloud, it needs data centers, and AI needs data centers. They build the chips. Nvidia and AMD build the chips for these data centers. So high performance and adaptive computing leader, powering the products and services that define the future of data center, artificial intelligence, PCs, gaming, communications, and automotive. Now, before I go on, guys, I need to announce this video is sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. A reminder, they don't tell me what videos to make, what to create, what to tell you guys. They're a great partner. They allow me to bring more content like this for free to you on YouTube, so check those guys out. We also have a private community. It's patreon.com, including a Discord. I'll talk more about that later. Let's get into the next stock. Lucky number 7. You can probably figure out maybe by the colors on the screen. It's Google. I did my best to try to match the colors of Google, but it's not perfect. You got this rainbow break coming at you. Relax if you're not liking the bright colors, because the next couple of slides, I'm going to tone it down a little bit. Google, I own the A shares. That's GOOGL. You can also buy C shares. That's this GOOG. I prefer the A shares. There's not much difference. It's really about voting rights. If you don't own a ton of shares, it doesn't matter a lot. Concentration, 3.17%. You know, I'm up on this one, I think around 100%. So I've had it for a little while. PE ratio, it's pretty attractive, 17.86. Now the risk there is you've got companies that are doing more in AI that puts threats on them. They also just acquired the rights for NFL Sunday Ticket, but they're paying $2 billion a year. So can they make that profitable? You know, advertising, of course, has been down, and in recession, it could get even worse. So PE ratio under 18, but it could even get more attractive, and that E might compress. In other words, the earnings might actually come down. So you have to keep an eye on these stocks, and earnings are going to be really important in 2023. These next couple quarters are going to be key for the direction of the markets and for these individual stocks. Now, Google is still in the $1 trillion club. It's a $1.14 trillion market cap, and it's a multinational holding company. So it's Alphabet is the name of the holding company. Google, of course, was the old company name. And because they've tried to diversify into so many other segments, they wanted to have a holding company name and then Google kind of underneath that holding company, which is called Alphabet. They own, you know, Google, Android, YouTube, Fitbit, Nest, Calico, DeepMind, DoubleClick, Verify, Waze, X Development, Waymo, which is going to be more your robo-taxis, and much more. This is probably, if you think of conglomerate for technology out of the mega cap tech, you could argue that Google is probably the most diversified, but again, they have a high concentration in advertising, which can get hit in a recessionary environment. Okay, rainbows are gone, and we're gonna go stock number 8. So this is my 8th largest. I've also owned this for a while. I've done very well. It's up nicely. Abbvie, concentration's 2.97%. Right now, the PE ratio is 21.53. If you buy it today, dividend 3.66%. My yield on cost from my original cost basis, 8.45%. So this is one that I'm going to continue to hold unless that story changes. When you think of Abbvie, I mean, they're a pharmaceutical biotech type company, very, very large. Company offers, you know, things like Humira. They've got Skyrizi. There's lots of different drugs that you've probably heard of. Also Botox. These guys have their hands on a lot, and I think that their pipeline's still very healthy. I think it can continue to do well over the next 5 and 10 years. This is one of those income type stocks, you know, DGI type stocks. It just adds a little balance in my portfolio and a little healthcare. So number 9 is Lam Research. And this is another one I've owned for several years. LRCX, concentration's 2.58%. P ratio, it's pretty cheap, but for good reason, because this is going to be under pressure. And you might even see some poor earnings results next couple quarters. It could even get cheaper than it is. Dividend yield, 1.64% if you buy it today. My yield on costs, 4.58%. Very nice. Lam Research designs, manufactures, markets, refurbishes, and services semiconductor processing equipment used in the fabrication of integrated circuits. So this is going to be a semiconductor equipment manufacturer, whereas we talked about Nvidia and AMD, they're fabless. They really design the chips and then they send it off to places like Taiwan Semiconductor to have those produced. Lam Research is going to build that equipment that's going to help build those processors and those integrated circuits. Okay, guys, stay tuned for number 10, because I think it's going to surprise you what it is. I don't think anybody would have guessed it. I did some polls on Twitter to kind of guess my top 10, and there's a few people that were close, but nobody got it right, and several people were way off. I think most people assume because I covered a lot of cloud stocks and I worked in cloud SaaS, that my portfolio is all SaaS stocks, and that's not really the case. So stay tuned for that. You can also see all 59 stocks. Now, I have a high concentration. You saw some of those 5% in those first 4 or 5 stocks. I have high concentration in the top 20, 30 stocks, but I kind of manage my spec a little differently and I buy smaller positions. The idea behind that, Peter Lynch, you only write 6 out of 10 times. If you invest $1,000 in a stock, the most you can lose is $1,000, but on the upside, it's unlimited. You can make $10,000 or $100,000 on a $1,000 investment. So I've got a lot of these smaller positions in the back half. If you are interested in seeing the full portfolio and concentrations, go to patreon.com/firedupwealth. I'm gonna give this video away to all tiers, so you can join any tier, but I would encourage you to join Elite or above, and I'm gonna tell you why. So if you join Elite, you'll get access to our entire conference that we're coming this Friday on January 6th. There's going to be 14 videos over 14 weeks, and I'm going to break it down real quick for you here. So this Friday, January 6th, I'm going to do an introduction to the series. It's going to be a series of 14 videos. It's called the Get Fired Up Virtual Conference for 2023. It's also going to provide a macro overview. It's available for all tiers on January 6th. After that first one, this is going to be Elite only, personal finance tips and tricks. These are going to be about an hour each. So you're going to have about 14, 15 hours of content here. January 20th, we're doing portfolio management and blueprints, how to build a portfolio. That's going to be a great one. January 27th, I'm going to do a cloud SaaS update for all Elite or higher tiers. You can also join Platinum, which is going to go away in a couple of days here, I think on the 9th. So check that out. And if you join Platinum right now and do the annual membership, I'm giving 2 virtual one-on-one sessions, mentorship calls for free. So you and me one-on-one for 60 minutes, 2 of those sessions for free if you join Platinum and you do the annual membership, okay? So we're gonna do a state of semiconductor sector on the 3rd, so cover all semiconductors, kind of the state of the environment on February 3rd. Then we're gonna do an EV energy update. We're gonna do space stocks, space the final frontier. I'm gonna do a 90-minute crypto and metaverse update. Now, these sessions are gonna be me, but after that first session, I'm gonna include members from the community. So there's going to be a panel of a couple different investors, and it's going to give you different perspectives and be kind of like an audio podcast, like a video podcast, but it's going to be a combination of my masterclass videos kind of blended together with a podcast, and it'll be a very interesting format, and I think you guys will like it a lot. On March 3rd, we're going to do spec stocks to buy, cover some of the community's favorite spec stocks. Then we're going to do growth stocks to buy, the community's favorite growth stocks. We're going to do a value investing panel, which is to include those dividend and DGI, dividend growth investing type stocks on March 17th. Then we're going to do on entrepreneurship. This is going to be members from the community that own their own businesses and share some of their tactics with you and some of their experiences with you to help you if you're going to start a business. March 31st, Fired Life. So fired, financial independence, retire early with dividends. We're going to talk about early retirement on dividends and speak to members from the community, at least one member. I think there's probably going to be 2 on that panel that have achieved financial independence and are living off dividends, passive income right now. And then April 7th, so we're talking about 14 consecutive Fridays here, we're going to do a community Zoom meetup and closing remarks. So there's going to be 100 seats. We're going to have 100 people join, first come, first serve from the community. And we're going to do discussion, follow-up, and Q&A. It's probably going to be 60 to 90 minutes. So 14 sessions, join Elite or higher, and you can join us for the conference. So what is my 10th stock by concentration? It's going to be SideTime, which I think a lot of you'd be surprised to hear. Now, the reason for that, I've always liked this stock. I did a video on it in the channel, but I said it was too expensive. And when it started getting closer to $100, I started nibbling, and I went a lot harder on the stock when it was closer to 75. And I really filled out the position as best I could. So I am green on this at this point. I think there's still some risk for the stock, and it could, retest those lows that we saw in October, November of 2022. But SideTime, my concentration is about 2.54%. PE ratio is a 51.22. Market cap is a little over $2 billion. And I like these small cap semiconductor companies. In fact, I own 3 primary ones, and you can see that if you go check out the other video after this. But small cap semiconductors, I think they could be multi-baggers, names like SideTime. So if you're not familiar with SideTime, I've got a video on the channel. I'll put a link above. Go watch that video because it's like a deep dive analysis on SideTime. It's like a 20-minute video, and it breaks the company down really well. But essentially what they do is they develop, design, and sell silicon timing systems internationally. This is a newer technology than the older quartz technology. The company provides resonators and clock integrated circuits, various types of oscillators. The solutions have applications in various markets. They really cover everything here. So you think automotive, industrial, Internet of Things, 5G, mobile, consumer, aerospace, and defense. I like this company a lot. There is some risk with this company for sure. And you have to be careful with any kind of small cap type stock, but it is my 10th largest position, a concentration. I'm bullish on this long term, guys. I'm excited for 2023. Make sure you go check out Patreon. Join any tier. You can go look at all 59 of my holdings in concentration. At a very minimum, subscribe to this channel. Click that bell to get notifications because I'm going to be bringing the heat in 2023. Make sure you like, comment, all that good stuff. Share this with your friends. Let's get this channel over 40,000 subscribers in 2023. I hope you have a great new year, great 2023. And I appreciate your time and attention, guys. Have a great rest of your day. Take care.